I'm University of Illinois Extension's Todd Gleason. Welcome to a Farm Doc Daily webinar. We're here to talk about young and beginning farmers. Thank you so much for being with us today. This will be a panel discussion. Of course, our panels and all of our webinars are sponsored in part by some folks that really help us out here at the Farm Doc team. They include Compeer Financial, FS Growmark, Illinois Corn Growers Association, the Illinois Soybean Association, Corteva AgriScience, TIA, the Center for Farmland Research. You can find them on our website at farmland.illinois.edu, and many others. Thanks to all of our sponsors. We appreciate them being with us, including Farm Credit of Illinois. Nick Paulson is going to take us through the bulk of our programming, but I will remind you that if you have questions, you can put those into the gray boxes. They're either over on the left-hand side of your page or down at the bottom, depending on what size screen that you have. And as you put those questions in, we'll see them and we'll get them answered. Nick's going to pick up in just a moment, but I do have a poll to get you started with. This is something we wanted to test out and see whether it works. Jim Baltz is behind the scenes. He's going to pull that poll up for us. Here's what it is. Where are you watching or listening from today? Where are you watching or listening from today? We give you some choices at home, in your office, from the field, whether that's in the grain cart, the combine, the tractor, or the truck. You happen to be out doing some exercise, walking, running, driving, or maybe just from your happy place. Are you at the beach, fishing, at the park? We'd like to know. So go ahead and fill out that poll. And once we get about, 70% of you have already filled it out. So we're working towards a quick run on where you might be. Interestingly enough, I was wondering if we might have somebody on the combine or tractor. I think we'll give this just a second, because if they're in the combine or tractor, they might be fairly busy and we won't know it right away. Again, just as a reminder, if you have questions today, the gray box is the place that you can drop them. So 29% of you are at home, 71% of you are in your office. Nick Paulson, I was kind of hoping that we'd see somebody in the tractor or the combine, but apparently not today. And usually they're pretty busy. I bet there is. They're just, it's busy inside those two cabs, so not a chance to get back to us. Good morning to you, Nick. Thanks for being with us. And the program is now yours.
All right. Thanks a lot, Todd, as usual, for bringing us in. Yeah, we wanted to ask that question. We get feedback sometimes that, people like the fact that they can have the webinar on their phone, maybe while they're out in the field. So we're just curious how many might be joining us like that this morning, but, probably focusing on other things if they were in that situation, as you said. So with us this morning, we have some guests. So another thing we're kind of trying out new in today's webinar, we're not going to have any slides. So we're going to run this as a panel discussion. Both Krista Swanson and I have a little bit of introductory material, very brief, and then we'll turn it over to our guests. So I want to start by introducing them. So this morning we have John Gerke and Crystal Zwilling from Illinois FSA. John is the Farm Loan Chief, and Crystal is a Farm Loan Specialist with Illinois Farm Service Agency. We've also got Caleb May, who's Regional Manager at Farm Credit Illinois, and then Cullen Kennedy, who is in Business Development with Compeer Financial. So I want to, again, thank you guys for agreeing to join us and share some information about young and beginning farmer programs within your organizations. We obviously very much appreciate the sponsorship and the working relationship we have with both Compeer and Farm Credit Illinois. And then, Illinois FSA has been a great resource for us to work with on the Farm Doc team, whether that's Farm Bill program education activities we've done with you all, or things like today where you're just, we're helping each other get information out to our stakeholders and our farmer audiences. And so today's topic is young and beginning farmer programs. Again, Chris and I have just some very brief points here. So from my end, the agriculture industry is one that is, very capital intensive and also very competitive. And so things that affect all operations, challenges that all operations face is access to credit, whether that be for operating lines to cover some of those annual expenses, heightened need and for that with increases in costs over recent years, as well as access to some of that longer term financing for land acquisition, which is the way that farm operations build equity over the long term. And those issues again are big issues for all farm operations in the Midwest, but of particular interest and importance for young and beginning farmers, simply because it's the young farmers that tend to carry the much higher debt loads, and then also tend to have weaker liquidity positions. When we look at the statistics, whether that's from Illinois FBFM here in the state, or we look at the Census of Ag, those are two characteristics that always come out when we look at kind of solvency positions and liquidity positions. So with that, I'll turn it over to Krista. She can say a few things, and then we'll move on to our guests.
Yeah, so in addition to the financial challenges that Nick talked about, young and beginning farmers also have higher rates of off-farm employment. In the last ag census, about 3/4 of young and beginning producers in Illinois had a different primary occupation aside from farming. And that, in comparison, is only about half of non-young and beginning producers. So we see that higher rate of other occupation taking the primary spot. And so often young and beginning farmers often also have families, which can add to the challenge of having more people to support, needing health coverage, which can be costly, and trying to find childcare is also another challenge. So I guess to tie together what Nick said with some of what I just said, young and beginning farmers are in this position where they're trying to invest in a capital intensive business while facing the same cost and competition that established farmers are part of, and often taking on additional jobs that in effort to support their farming endeavors, that is also a pull on, a demand on their time, and, all that while also possibly working to support a household or a young family. And so with that, I would like to have us pull up the first poll question. So we've talked about some of these challenges that some of which are maybe unique to young and beginning farmers, and some of which all farmers are facing. We'd like to know what you think are the biggest challenges facing young and beginning farmers. So from our choices here, we have access to land, access to credit or financial capital, access to labor, and access to health or family care. And so we'll give everyone a minute here to respond to our poll. As a farmer myself, I have to say it's kind of hard to pick just one of these if I were responding. How are we coming on responses, Todd?
We'll go a few more seconds here, Chris. I have the benefit of seeing them live on screen here.
Okay.
All right, Jim, we can close the poll up and take a look.
Okay, so it looks like we have 68%, about 2/3 saying access to land is the biggest challenge, and then followed by access to credit or financial care. And that access to labor and health and family care ranks pretty low compared to those other two, our top two there. So, and so I guess I also want to say here that we just talked about some of the challenges, but because of those challenges and being new to farming or relatively new in the early stages, setting goals and having a business plan is also a fundamental step. And so part of the reason that we wanted to do this and invite some of these representatives here today is because these are important they're important partners for young and beginning farmers, but not only on the financial side, but through some of the programs that they have, they can also be a valuable part of a young or beginning farmer's, overall, planning team for their farm. So at this point, I'd like to turn it over to Colin Kennedy in business development with Compeer Financial to share a little bit about what Compeer has to offer for young and beginning farmers.
Yeah, thank you, Krista. Again, my name is Colin Kennedy with Compeer Financial. I've been with Farm Credit just about 20 years now. So our young beginning and small farmer program is called Groundbreakers. So groundbreaker is someone who faces challenges head on. They're focused on their vision, committed to making their vision a reality. And so at Compeer, we're committed to partnering with groundbreakers to ensure their success. So we offer knowledge, expertise, tools, financial products, and other resources for groundbreakers to start, manage, grow their operation. So our Groundbreakers program consists of basically 3 legs. There's a lending program aspect, a grant program aspect, and then the education and outreach piece of it. So our lending program provides discounted rates and flexible underwriting to young, beginning, and small operation farmers. And so while the discounted rates are great, I think the key really lies in the flexible underwriting. Nick and Krista both mentioned it before. But a lower rate doesn't do you any good if you can't qualify for the financing. So this program, what it does is it provides for allowances for farmers that probably have less owner equity in the operation, maybe less cash on hand, lower debt repayment capacity. It also allows for a higher loan to value. And a lot of these metrics also can be provide even more flexibility along with an FSA guarantee, which is where that partnership is extremely beneficial. So again, as Nick and Krista mentioned, a young farmer starting out, you probably don't have the same owner equity in the operation. You're probably not flush with cash. So this program really allows young, beginning, and small operation farmers to qualify for financing that may not be able to under traditional underwriting. And then the discounted rates that go along with that makes it easier to pay back that financing. So within that program, we also have some specific loan programs within it. So there's a starter loan program and a character loan program, as well as finished barn and broiler barn loan programs as well. But the features, the discounted rates and the flexible underwriting is available outside of those specific programs as well to any young, beginning, or small farmer that we may be working with. So the second leg of the Groundbreakers program is our grant program. So the Beginning with Compeer grant program provides up to $1,500 in grant funds for farmers within the Compeer territory, which stretches through Minnesota, Wisconsin, and Illinois. Grants are available whether or not you are a Compeer client. So you don't have to be a client to be eligible for funds. They can be used for a variety of reasons, but primarily related to improving your business and operational management skills. And we're also kind of go over and above that $1,500, the max, but we go over and above that. An additional $500 is available for any farmer enrolled in a multi-year farm training program. So things like the Illinois Business Management Association, Wisconsin Technical College System, or Minnesota Farm Business Management Education Program, as a few examples. So then the third leg is around education and outreach. So I refer to this leg of the program as kind of a two-way street of information, education, and insight sharing. So we at Compeer offer expertise and educational opportunities to farmers, but just as important as that is we also gather insight and expertise from our young, beginning, and small farmers to learn more about the challenges, opportunities, and needs that segment is facing. So we offer educational opportunities both in person and online via articles, videos, and events. If you look at our website, we've got some category breakdown where you can look at, starting and growing your operation. There's content there and videos. Our signature event is the Groundbreakers Conference. So it's a 2-day in-person conference. We also make the breakout sessions available online afterwards for those that can't attend, but it's an in-person conference featuring expert speakers from throughout the ag industry and really focusing on starting, managing, and growing your operation. So I won't go through the whole list of the types of breakouts offered, but it's really a broad spectrum. So it's on managing the operation itself, managing the financials and understanding the financials, managing stress, work life or farm family balance, innovations in ag, just a slew of other topics. And a lot of those topics are derived from conversations with our young, medium, and small farmers. So we also use that conference as well as a client advisory group we have that consists of 20 young, beginning, and small farmers throughout our territory. So we gather So there's 20 members of Young Beginning Small Farmers as part of our advisory group. We meet with those twice a year, once in conjunction with the Groundbreakers Conference, then once we kind of have a standalone meeting in the summer where we meet kind of a 2-day meeting. And a lot of that is it's around peer networking and discussing the top of mind topics going on in the industry. And they provide a lot of feedback. They help shape what our Groundbreakers program looks like. They help shape what the conference looks like. We rely on them a lot to really stay connected with that segment and understand what's going on. So those are the 3 legs of our Groundbreakers program. We're always looking for ways to improve the program or ways to partner with others in order to serve young, beginning, and small farmers. So if you have ideas or questions, feel free to reach out directly to me. My contact information should be in the handouts here on this WebEx. So, thank you.
All right. Great. Thanks, Colin. So I think next up we'll have Caleb May from Farm Credit Illinois. Tell us a little bit about their program.
Yeah, thanks. Appreciate the time to come on here and discuss young and beginning and small farmers. All the farm credit associations across the country have a mission to serve that segment of the industry, and everyone does it just a little different, but we still have the same endpoint in mind. Farm Credit Illinois, we're the neighbors to the south of Cullen and Compeer. Much like what Cullen talked about, we have a program that's specifically for young and beginning farmers. Our program is called Fresh Roots. And the purpose of Fresh Roots is to develop those younger or beginning farmers, and I'll talk a little bit about our eligibility here in a second, but to develop those folks not only from the lending perspective, but also from a knowledge learning perspective as well, so they can learn and grow and eventually not rely on programs such as the Fresh Roots that we have, but to more participate in our traditional underwriting standards from a lending perspective. So just to talk a little bit about eligibility, we focus on young and beginning specifically with our Fresh Roots program. And these are farmers up to the age of 40 or in their first 10 years of farming. So you wouldn't necessarily have to be young to be beginning. You could be 55 or 60 and be in your first 10 years of farming, and you're going to be qualified or be able to participate in our Fresh Roots benefits and Fresh Roots program that we have to offer. So that's one unique piece there that we really are proud of within Fresh Roots. So I'm going to talk a little bit about the lending assistance side of our program, and then I'm going to divide it up and talk a little bit more about our learning incentives and our recognition piece of the program as well. So just to talk a little bit about the lending side, we focus primarily on farm real estate loans and operating loans. We have a discounted interest rate, much like Cullen discussed. We have a significant discount for a 5-year period. In that 5 years, that's where those new borrowers are working with our lenders to improve their financial position, meet their goals, and have those discussions with their lenders to eventually come out of the program as a traditional farm credit member. So we will work with Fresh Roots real estate loans up to $1 million and up to $500,000 on operating loans. So those are our limits for our discounted rates. We also have some relaxed underwriting standards. We all know that young and beginning farmers have a little tougher go right out of the gate. So we're going to relax those underwriting standards, specifically in the area of working capital, ownership equity, long-term repayment capacity. Those are some main metrics that we're going to look at and reduce those and relax those standards for our Fresh Roots borrowers. The other thing that a lot of specifically our real estate loans, we will partner with FSA on a lot of those, whether it's through the 50-45-5 program, 50-50, or simply an FSA guarantee, depending on where that loan to value is on our Fresh Roots loans. Another unique feature of Fresh Roots is that we will cover that fee of the guarantee that FSA charges. All the FSA products come with a fee, and one thing we've decided to do is step up and cover that fee for our Fresh Roots borrowers. So I think that's a really unique piece to the lending assistance that we offer. And I mentioned earlier the relationship with our lenders in our branch offices. And one thing that we will require with each loan application is a written business plan and a thought through cash flow. Now, some folks might just think of that as additional paperwork, but I can promise you that the young and beginning farmers that really take that to heart and sit down and have that conversation with their lender, work through that business plan. It's things like, what are your short-term goals or long-term goals? What is your current situation? A simple SWOT analysis. Are you properly covered with crop insurance? What are some of your mentors that you look up to? What are some of your grain marketing strategies? It's things that you should have that conversation with your lender in order to advance that relationship. And I've seen it firsthand. A lot of times those relationships foster into a lot more, and the benefits are great. The cash flow statement is simply that, revenue and expenses. And one of the key pieces, I think Krista mentioned it in her opening, is just the family living expense for a young and beginning farmer can be a tough hill to climb. And that's a part of the cash flow. And I think looking at those things realistically with the lender is something that can really open the eyes and get folks started in the right direction. So that's a summary of our lending assistance piece of Fresh Roots. The other side of it is our learning incentives. We offer several different educational offerings. We have Farm Financials 1, Farm Financials 2, which will be a new series. We've partnered with Illinois FBFM on that. And those are financial, I would call them at balance sheet workshop, learning the nuts and bolts of the balance sheet, things like that. We've got a series of farm credit colleges, whether those are estate planning, days with Dr. Cole, those types of events. And then we've also got our Fielding Forward crop insurance meetings that happen all through January, February, prior to crop insurance sales closing. So we offer all of those different classes, and part of those classes is that Fresh Roots members can earn vouchers for attending those classes. They're $500 a piece. A Fresh Roots borrower can earn up to $2,000 in Fresh Roots vouchers by attending those educational seminars, and there's most of them are specifically focused on our Fresh Roots members. In terms of recognition, we also have what we call the Director's Cup Award Program. So each year we will have Fresh Roots members fill out an application and go through a selection process that they are awarded the Director's Cup. Each year we'll have, a handful, there may be 3, there may be 5 that qualify for the Director's Cup. It's an additional $5,000 prize, and then they get to carry the Director's Cup. And it's really kind of a neat thing for some of those young farmers to be recognized at that level. We do seek feedback, just as Colin mentioned. We have our standard member advisory council meetings. We've also developed a Fresh Roots member advisory council, so we can gain feedback as we've been into this program for several years now. So we can see what we need to improve, and we've made some tweaks over the years and changed some things here and changed some things there. So that's our Fresh Roots program in a nutshell. To summarize, right now we've got almost 1,500 young and beginning farmers enrolled in our Fresh Roots program here at Farm Credit Illinois. So it's something we're very proud of, and has been a highlight of our association in the last several years.
Great, thanks, Caleb. Last up, we're gonna go and hear from our guests from Illinois Farm Service Agency. Before I hand it over to Crystal, I did want to remind everybody, both Colin and Caleb, and I'm sure Crystal and John will refer to the handouts. And so if you those are available as PDF downloads. They're kind of at the bottom portion of your webinar bar there. And if you have any issues locating those, you can type a message into the chat, and Jim and I will see that here in the studio. We can try to help you out. But with that, we'll turn it over to Crystal. I think she was going to start things off for Illinois FSA with her and John.
Yes, thank you. Good morning. So as he mentioned, I'm Crystal Zwilling with the Farm Service Agency. I work in our farm loan department, but I also am the Illinois Beginning Farmer and Rancher Coordinator. And so John and I are going to kind of split duties today, and we're briefly going to talk about our loan programs. And so to start with, as we talk about beginning farmers or someone that is new to farming today, I want to mention that we identified these individuals or entities as someone who has not operated a farm for more than 10 years, substantially participates in the operation. And then for our farm ownership loans, they do not own a farm greater than 30% of the average size farm in that county that they operate in or live in. Some agencies have a slightly different definition of a beginning farmer, so it can be sometimes confusing. And you can always reach out to your local office with any questions about what we're going to discuss today. But I just wanted to quickly mention that. So FSA is supervised credit and is different from your traditional credit. We are a lender of first opportunity for those who may not otherwise qualify for an ag credit, and our farm ownership loans are typically made jointly with another lender. As Colin and Caleb both mentioned, we work with Compeer and Farm Credit Illinois and your local banks. Then with and mostly our especially our farm ownership loans, they are also, as they mentioned, but they're good for those borrowers, you know, just starting out, and they may not meet the typical lender criteria. Maybe they don't have enough for a down payment. They don't have enough to put up as collateral. So that's where us coming in jointly with another lender helps. We take half the risk away, type of thing. So FSA has a variety of loan programs to meet different types of needs, whether it be for making improvements or expanding your operation, or if you're just getting started or want to purchase a new farm. So our loan programs are divided into two types. We have what we call the farm ownership loans, and then those are typically used to purchase farm real estate. And then we have our operating loans. And I'll kind of quickly just start with the farm ownership loans here. A great program we have to help beginning farmers is called our down payment program. And this program is sometimes, I think Caleb referred to it as, sometimes it has this name, but it's the 54550 program. And it is only available to beginning or historically underserved producers. And it's called the 54550 because the program requires a minimum 5% down payment. FSA provides financing for 45%, and then the remaining 50% is covered by that other commercial lender. We have a maximum loan amount that FSA can provide is $300,150. For this particular program, our interest rate is 1.5%. That's locked in for the life of the loan, and the maximum term for that program is 20 years. Again, since these loan programs are made jointly, the rates and terms that I'm going to talk about are just for the FSA portion, that loan. The other farm ownership program we have is the participation, or the 50-50, as Caleb also mentioned. This program does not require a down payment. You can provide one if you want, but it is not a requirement. And so with this one, FSA provides 50% of the funds, and then your other lender provides the other 50% and of the purchase price. So then, as I said, a down payment is not required, but we will gladly take it. And but anyway, it's again 2 separate loans. FSA's portion, the other lender's portion. And then for this particular program, the interest rate is 2.5%. This program does have a maximum term of 40 years. And the most we can loan on this is $600,000. So with this program, it is available to beginning farmers, but you do not have to be a beginning farmer to qualify. It's great for beginning farmers though, because like I said, we don't require a down payment, and then the term can go out up to 40 years. And with that down payment program I just mentioned, with that 20-year term, sometimes, you know, that's tougher depending on the purchase price and everything. So the extra, you know, term to the 40 years gives you a little more wiggle room, essentially. And then we also have our operating loans. So our operating loans may be used for normal operating expenses. You can use it to purchase machinery or equipment, livestock. the maximum we can do for operating loans is $40,000. One thing I do want to mention about our operating loans, they are different than our farm ownership besides the loan purposes, but also we make those, we would finance 100% of that. Those are not joint loans with another lender. For operating, the repayment term is out up to 7 years, depending on the loan type and the life of the security, essentially. The interest rate for our operating loans changes monthly. I think October is 3.875% right now. Those work just like our farm ownership loans as far as the interest rate being locked in for the life of the loan once it's approved. And then real quick, I do want to mention the microloan program. So this is something they created for beginning farmers, essentially. It was developed to better serve the unique financial operating needs of like newer or the niche market or small to mid-sized farms. And we have two types of microloans. They're just like, we have the farm operating and then the farm ownership. Just like I mentioned before, the eligibility, everything kind of works the same, but what is different about microloans is that they, the most we can loan for those is $50,000. So for the operating microloan, again, the term would be up to 7 years, depending on what the funds will be used for. And then our farm ownership loan for a microloan is the maximum term for that is 25 years. So we had the down payment of 20 years term. We had the participation loan program up to 40-year term, but the microloan is going to be up to 25-year term. And then those interest rates are based on what we have in effect at the time that loan is approved. John, I think you were going to talk about guaranteed.
Yeah, I'll do that. Thank you, Nick and Krista, for having us. And Crystal, thanks for that lead. She covered the majority of the beginning farmer programs that we have. Before I forget anything, I do want to point out that the Groundbreakers program and the Fresh Fruits program that were discussed, we highly recommend those things. Those are great opportunities for young beginning farmers, and we do encourage them to take advantage of everything that's out there. So I didn't want to forget that part. So overall, we have a very active loan program in Illinois. And when people think of Farm Service Agency, they think of the program payments and CRP and such. But in Illinois, we have roughly a $2 billion loan portfolio. And out of that, we focus, of course, on beginning farmers as much as we can. But we do have things out there for all farmers. And Crystal talked about the direct loan program. We have a guaranteed loan program where we don't actually disperse any money. And it's been mentioned here a couple times, but we do guarantee loans through the lender, commercial lenders. And the thing is that both direct and guarantees, we don't compete with those lenders. This to me is a great use of government resources, is we partner with these commercial lenders and we're not in competition. And so we work in lockstep with them to provide the credit that's needed out there. Our programs, I mean, I think overall they work very well. We have active guarantees with over 150 lenders in Illinois. It allows us to get involved with higher dollar amounts of credit because our limit there is roughly $2 million. Over time, funding has been extremely strong over the last several years for both the direct and the guarantee program. So we're very happy about that. And overall, I mentioned the guaranteed loan program. A benefit to that, the way that it's used the most is it's eligible for all farmers are eligible, and it allows many customers to lock in long-term fixed rate interest. And when I've been around a long time, and when I started, that wasn't an option available for farmers. And our guaranteed loan program has been used successfully for farmers of all ages and experience to help them get into the secondary market and lock in that fixed rate. So it's worked very good for us. I realize now is probably not the ideal time to be looking at that, but there are products out there that our commercial lenders will have available that we can guarantee. So in addition to our regular loan programs, we also have farm storage facility loans, and it's not administered. Maybe it doesn't come from the same pot of money. Those loans come from the Commodity Credit Corporation and are administered in every field office that we have in Illinois. And those can go for grain bins, grain handling of all sorts. And there's a lot of options out there. And the rates are, very good. And the terms are, a lot of options there also. So we have a very large farm storage facility loan program in Illinois compared to many other states. So obviously we don't need to sell it too much, but we do want to make sure people are aware of that. There's just a tremendous amount of grain storage that went up out there in the countryside using this program. And we see that, of course, as a good thing. So we probably took up more than our 5 to 7 minutes, but we're here to take part in the panel and work with our customers. One thing I will say is, I guess, promoting our program is that it's driven by what these commercial lenders want. So if they decide that they need us to provide operating money, we can provide operating money. The majority of our funds have historically gone towards real estate because that's what our lenders have wanted us to take part in. And so that's another, positive. We got that flexibility. So with that, I'll turn it back over to Nick and Krista, and thank you.
All right. Thanks a lot, John. Thanks, Crystal. So we are going to kind of move on to the question and answer portion of today's webinar. So I want to encourage all of our attendees to go ahead and type questions in. We've gotten a few audience questions that we'll try to get to, and Krista and I had prepared a few questions for the group as well to kind of kick that off. Just to give people a little bit of time to maybe think about and enter questions. We do have one more poll. So Jim's going to pull that up. And so this one, we thought we'd ask our audience, what are some of the most important areas, or of the options provided, what is the most important area where young and beginning farmers need more resources? So a lot of these things are topics that all of our guests touched on today. So we've got technical training, business training, social and peer networks, and then setting and achieving goals. So just curious what the audience thinks in terms of priorities for focusing on these different types of areas for young and beginning farmers.
And Nick, while folks are filling out that poll, I'll remind producers and others that are online that these webinars and the Farm Doc Daily website, for that matter, do have sponsors. They include the TIAA Center for Farmland Research, Compeer Financial, Corteva Agrisciences, Farm Credit Illinois, the Illinois Corn Growers Association, FS Growmark, and the Illinois Soybean Association. The other item is that if you do have questions, you can find the question box in the gray GoToWebinar control panel. It's probably over on the left-hand side of your page. If you're on a desktop, maybe something smaller, like, I don't know, if you're on a phone, certainly down at the bottom of the page, and go ahead and fill those out. So here are the answers to the polls. What do you think of them? Business training is what most folks believe farmers need in resources. Nick?
Yeah, so I think the responses to both of the questions we posed to the audience are interesting. I think they're very relevant to the folks we have joining us today. So just to kick off the questions, and I guess we didn't talk about necessarily who I'd pick on first to respond to this, but in your guys' experience, so we asked the audience, at least some of which are probably young and beginning farmers themselves listening today, what their biggest challenges were. We had two-thirds focused on access to land, which is something we consistently hear from farmers of all ages. And then on the resources, we had about 2/3 or a little over 2/3 talking about business training. How does that line up with what you all see, probably on the lending side, given what you all do? Maybe I'll pick on Caleb. We'll have Caleb start first.
Sure. No, I think those were probably where I expected the poll questions to land. Just to hit on the business training and the setting goals piece that were in that second poll. I mean, that's one of the key components to our Fresh Roots program and to any really young beginning and small farmer being able to partner with that lender or partner with whatever that business partner or mentor might be. I mean, farming is a lot different, and it becomes different year to year. And that business mind, that business focus is where we're seeing the young farmers that gravitate toward that business focus are the ones that seem to take off a little quicker, the ones that seem to be a little more successful. So I really think that business mind, that business acumen is something that if it's not there, it probably needs to be moving in that direction, or it's something that maybe needed to have a little focus. In terms of access to land, I think, yes, that becomes an issue with any beginning farmer, whether that's just simple access to land or whether that is a transition plan with another generation being able to have decision-making access over that land. There's a couple different ways you can look at that, and I think young farmers have that challenge and likely always will.
Great. Cullen, any thoughts to add to that?
Yeah, no, I totally agree. Where that landed is what we hear from our clients a lot too. So we just had our last Groundbreakers advisory group, which is the 20 clients that are young, medium, and small farmers I mentioned in August. And the discussion topics that they wanted to talk about were around land rent, growing your land base, maintaining your land base. And then the second one was around employee retention and retaining those employees. It was a very interesting conversation because they were both really tied together in relationship management. It's all about how you manage your relationships. Like growing your land base isn't necessarily price based. That's an aspect, obviously, but it's really about that relationship and managing those relationships and how you get along with both employees, landlords, and so on and so forth. So yeah, I think it's a real need to have those skills and to have that training to be able to manage those relationships and solve some of the issues they're facing.
Yeah, and I know the peer network choice wasn't necessarily ranked high of the options, but I know that those seem like big components of both the Groundbreakers program and the Fresh Roots program. That you get the young farmers together and they kind of learn from each other. At least that's the young farmers I know that have participated in those programs. That's, I think, one of the big benefits that they take away from it.
Yeah, and so that's come out over the past few years too. Is a big one of their big challenges is it's almost a sounding board. Am I doing the right things? How do I stack up against others? And there's a real need to have these peers where they can kind of bounce ideas off of and compare and contrast. And it's been over a 2-year period. We've worked within we have an innovation lab. We've worked the project out to figure out what the best way to kind of set up these peer groups are for these farmers, because we found it's really we kind of know how to make a peer group successful, which is very resource intense, and you got to do all the setup and things like that. We're trying to make that on a broader basis so that they can kind of have those components and make those connections. So we started something called Common Ground, which is a digital peer networking event. It's basically a meeting like this where we put people in small breakouts and they get to know each other and can make those connections, but trying to kind of fulfill those needs as well that we're hearing about.
Yeah. John, Crystal, any additional comments on kind of what we heard from the audience versus what you guys see in working with farmers?
Well, I think we see the same issue with the land access, and that is a problem. When it comes to the business acumen, we certainly agree with everything that's been said, and we have a program, and it's not as robust maybe as what our partner lenders have, but it's called borrower training. And so we partner with the universities like the University of Illinois, who put together borrower training programs for us that we can offer to our customers. And quite frankly, many of our young farmers today coming in have college degrees, and many of them agriculture degrees. We don't necessarily require that they take this borrower training. It's suggested, but we don't require it. We can require it as part of a loan process. We're a little reluctant to maybe force that on people, but we certainly want to encourage it. And but we see the same concerns with the obviously the land prices and the rising interest rates and such. So
yeah. All right. Well, I'm going to let Chris ask a question here too, but there's actually a good combo of something we had thought of and then an audience question. So Crystal brought up that, you know, kind of every group maybe has slightly different definitions of what is a young farmer, what is a beginning farmer. The beginning farmer thing, I feel like is pretty consistent. It's usually that 10 years of operator experience. In terms of young, you know, sometimes that's not something that's defined. Sometimes it's under 40, sometimes it's under 35. So maybe just ask everybody to go around and clarify that. And then the question from the audience was kind of more specific. Would any of these programs that you all talked about today be available to a farm that has been operating for years? I'm assuming probably in the family for decades, but was recently inherited. And so maybe that operator is new. I think I know the answer, but I'm going to let you guys to take that. We can, we'll start with FSA first this time, I guess.
Well, I think from the standpoint, if it's a new operator, the fact that we can work with that. So I guess we need to clarify if this is a land purchase or if this is an operating type situation, but we can certainly do that. So if it's a new operator, especially if it's a beginning farmer, and they're going to say buy into that or buy a piece of that family ground, we can work with those type of situations. And those are actually work better for us than what, you know, maybe working with some of these auctions. You know, we're not set up, we're not equipped very well to be prepared to finance some of these auction prices. But yeah, we could certainly work with that.
Cullen, on the compeer end?
Yeah, so as John was mentioning, as long as the operator fits into that category, absolutely, they fit into the Groundbreakers program. As far as defining them, it varies a little bit. So on the lending side, young is considered 35 years or younger. But as far as like invitations to the conference and kind of the other legs of the program, we look at them as 40 years or younger for a young farmer. Beginning, of course, 10 years or less, and then a small farmer is sustained annual income of $250,000 or less.
So yeah, so ours would be similar to that. We would define young as 40 or younger, and beginning as 10 years or less. It's not either or. It is or, actually, not and, it's or. So 40 or under, or first 10 years. Now, in terms of the question about the operator, our program is based on the primary loan applicant. So if that individual, the primary loan applicant, fits those criteria, yes, they would be eligible for Fresh Fruits. If it's an entity, say it's an LLC or a corporation, the ownership basis of that LLC or corporation must qualify. So if it's a partnership LLC between two brothers, then they both need to fit for that LLC if the LLC is going to be the primary loan applicant. So yes, if it's somebody taking over an existing farm, they're the primary loan applicant. Yes, they do qualify.
Okay, great. Then we did get a few more pretty specific questions on eligibility. You know, maybe we can. It's you know, probably tough to answer those with the amount of information in the question. So I think what we can do, Jim, is give those questions to you guys, and maybe you guys can follow up with the attendees who asked those outside of this. I know we're going to give people the opportunity when we wrap up here to indicate if they'd like more information, and you guys would be happy to follow up with people individually if they're interested in these things. Krista, do you want to maybe pose a question to the group?
Yeah, so one question that I thought of is, I know that when purchasing machinery, for example, sometimes there's leasing programs as an alternative. So I was just wondering your thoughts on if a young and beginning farmer should be considering lease options. I know the Farm Credit Association do have those. We didn't talk about those today, but should a young and beginning farmer, is there reasons that they should consider a lease, or would you recommend that they consider a loan? Or just, I was wondering if you could share your thoughts on that. And I guess Caleb, we'll start with you.
Yeah, so equipment, capital type purchases, for our specific program, ours is focused more on real estate and operating. But to answer the question, I think yes, Farm Credit does offer leasing options. From a lending perspective or from a borrowing perspective from a young farmer, I really think that's probably a conversation that would probably involve a different partner besides us as well. I think the accountant, CPA, needs to get involved in that decision, because with any farmer, the decision between a purchase or a lease typically comes down to that tax planning part of the operation of the business piece. Is, okay, what's our tax strategy going forward? And I don't know that there's a defined answer that one's better or one's worse. I think it comes down to that individual situation and their overall tax planning strategy going forward.
Okay, thanks. And Colin, do you have anything to add on that one?
Not really. I'd agree with that. Our program, again, is based more on the lending, the loan side, real estate and operating. And again, it would depend on the circumstance of the situation. I mean, obviously one of the bigger advantages is pushing that large down payment to the end instead of up front. But yeah, I agree with everything Caleb said.
Not to skip over FSA, but I was thinking that you probably didn't have anything to add there. So Nick, do we have any other audience questions that are more general that you think would be good to ask?
Yeah, there's one that came in. I think we could throw it there. So CRP acres, do they qualify for young farmer lending programs?
Well, from an FSA standpoint, we discourage that. If a farm is coming out within the next year, that's a different story. But we have to stay away from investor type situations, and that's really what that is. So we really try to stay away. Now, if there's a small part of the farm that has CRP, that's great. That's not a disqualifier. But if the entire farm or the majority of it is in CRP, we're not looking to finance those.
And I believe, John, that is it true that I guess officially is the rule that if you're making a purchase using one of the programs you've talked about today, that you would have to have at least half the acres be tillable?
Well, there's nothing that says specifically that it has to be 50% or more, and it's somewhat open to interpretation. And you almost have to look at each farm individually and see what makes sense. But we have to be careful. We get contacted on a regular basis for people looking for hunting ground and investment type properties, and we're just not set up for that.
Okay,
that's not the intent. So.
And another question we get is, are there any credit programs offered through Compure, Farm Credit, FSA for young farmers or otherwise that have any direct ties to any environmental practices, requirements, anything like that? Yeah, we could start with FSA on that one too.
Well, I want to make sure I understand the question, and that is, all our loans are subject to environmental reviews. So we have to take a look at those, especially when we get into livestock. And we're under, we have more extensive requirements than what the private sector does. So if we get an operation for like a new livestock facility, we're going to have to take a look at that from an environmental standpoint. But if many of those environmental programs would fit into our loan program also. So I'm trying to think just how to word that, but we have actually a loan program called a conservation guarantee, where if they use a loan for conservation purposes, we can guarantee that loan through a lender. So yeah, anything that's environmentally beneficial, we're for. So.
Caleb, Farm Credit Illinois, any incentives, programs related to that, or Colin with Compure?
Nothing directly related to environmental incentives, no.
Yeah, nothing tied to our Groundbreakers program, but of course we partner with, carbon sequestration, things like that outside of the program.
Yeah. All right. Krista, did you have any one last thing you wanted to do? Looks like Todd maybe has a question.
I do have a couple of questions if we've got some time.
Surprise, the broadcaster has a question.
The guy who asks questions for a living.
Go ahead.
Yeah, so I do have a couple of questions for all three organizations. What's the spread of loans like? So USDA, I think, generally considers active commercial farmers at around 300,000 gross sales. I'm wondering what kind of spread you have in the loans that you do make, if you divide them up that way, and whether small, particularly very small farms, apply for loans to you very often. Caleb, why don't you start?
So you're asking to clarify some specifics, some statistics on our program? How many farmers are utilizing these loans, or is that what you're
the size
you're asking, or
the gross
the
sales?
size?
Yeah, the size of the farms that are applying.
I don't know that we've got data down to the size of the farms, but we do have. I mean, we've got over 500 million right now in loan commitments just for our Fresh Roots program. Obviously, that's a small percentage of our overall loan portfolio, but we've got about 2,300 of them that are receiving pricing discounts right now. So of that I gave you, we've got probably 290 to 300 million in real estate loans, and the rest would be operating. So I don't know if that kind of gets you the numbers you're looking at there, or some of the different statistics based on our portfolio.
Anybody else? Does FSA divide things out differently?
Well, we don't look at, we don't necessarily limit our customers to a certain dollar sales. So, but we do have what we call a family size farmer requirement. So I want to make sure we're talking about the same thing. But when we reach a certain size, and it's hard to say, there is no set dollar limit, but we do deal with family size farmers where the majority of the labor and management comes from the actual applicant. And we don't say if the gross is 500,000 or whatever that they can't get assistance from us, because we deal with larger customers all the time. But we don't have our programs broke out between those type of sales statistics. Now, we are trying to, I think USDA defines a farm as, they've changed it to anything with $1,000 or more in gross sales. We are looking to finance more of the smaller operators with these microloans that Crystal mentioned, and especially in some of these urban areas. And that's something that's relatively new for us, because, we're Illinois and we think corn and beans, right? So we're trying to expand that and help more of the urban customers with those smaller loans and the microloans.
I have one more question. We've got about 3 minutes before the top of the hour. And I'm wondering, Secretary Vilsack has been talking a lot this week about the Inflation Reduction Act, the $3 billion that is available within that act, and available to help farmers avoid going bankrupt. I'm wondering how much of an issue you all think that is. Clearly, the Secretary, not only as Secretary during the Biden administration, but for the 8 years of the Obama administration, has been very concerned about this, and it has made its way through government a couple of different times. And how concerned should we be? Anybody?
Not everybody all at once.
Well, as far as
none of the loan officers want to talk about bankruptcies. I understand that.
Well, I can just.
Colin, go ahead.
Well, I was going to quickly say, right now, we report on the credit quality of our YBS clients, and right now it's really strong. But we all know, how things are going economy-wise, inflation-wise. So it's always a risk. But I can say right now the data is strong.
I would agree with Colin. We see our credit quality is strong and has been for several years. I think currently, to look at today, commodity prices are definitely supporting some of that. Delinquency rates, at least in our association, are low. There's not what I would say a huge concern for that in our borrowing base inside of our southern 60 counties of Illinois today.
Nick, we reached the top of the hour. Oh, go ahead.
Oh, go ahead.
No, go ahead.
No, I was going to close this out. So this is the final comment, John.
I'll just briefly, I would say that from our standpoint, we're taking the credit when we work with these commercial lenders, and our delinquencies in Illinois have been the lowest in the nation. So, but you know, times get tough and things change, and so we've been successful so far, and we hope it continues.
Nick, Krista, any final word before we close things out at the top of the hour here?
I mean, other than I just, we really want to thank everybody for joining us today. But I don't know if you knew what you were getting into when I emailed you a month ago to see if you want to do this, but appreciate you sharing your thoughts. It was one of the best webinars for me to prepare for because it was mainly on you guys. So hopefully the audience liked kind of the little bit different format. So and like I said, there will be a post survey. So those of you can kind of stick on and answer a few questions there. There'll be an opportunity to indicate if you'd like to be reached out to individually with any of our guests, all of our guests, about more information about the programs. Krista, any final thoughts?
Nope, just to echo what you said. Thanks everyone for participating today.
As Nick and Krista mentioned, there will be a survey that pops up as you leave. Please do fill that out. We look at it. Jim Bolts, who's behind the scenes, will make sure that we see that. He'll also make sure that this is posted to the websites very, very quickly so you can watch it again at farmdocdaily.illinois.edu. Look in the webinars for the archive, or you can go to youtube.com/farmdocvideo. Thank you very much, Krista Zwilling from FSA, along with John Gerke, also from FSA, Colin Kennedy from Compare Financial, and Caleb May from Farm Credit Illinois. We appreciate you taking time, and to Krista Swanson and to Nick Paulson from the Farm Doc team, on behalf of Jim Beholtz behind the scenes, I'm Todd Gleason, wishing you a good day.